Oil prices are dropping today despite concerns about a potential shortage of Venezuelan crude supply. Our next guest notes that while the removal of Nicolas Maduro from Venezuela could increase that country's oil availability, the extent and timing of any price impact is unclear and will depend on U.S. policy. For more on this, let's bring in Eric Lee, global energy strategist at Citi. It's good to have you join us. Thanks so much for taking the time.
Hi, good to be here.
So there was some thought that maybe we would see higher crude prices given what's going on in Venezuela. What are you seeing? I mean, given what we're seeing today with the price of oil, is any of this a surprise to you?
I mean, there's still a good amount of uncertainty going on. I mean, on one hand, in the near term, you have still questions about U.S. sanctions on Venezuela, on some of the blockade, on the crude oil getting out of the country, how much is getting to China, et cetera. And then you've got the questions about, what this might mean short term and longer term for other geopolitical flashpoints that might affect the oil, from Israel, Iran to Russia, Ukraine. So I think that's in the backdrop. On the other hand, we are seeing, questions about, what it means if and as Venezuelan oil reserves are developed further. Can Venezuelan oil production recover in the near term, and then can it actually grow significantly in the longer term? So there's definitely a range of issues that we're kind of looking at the minute. And the big backdrop is, of course, that even for the past months, a lot of us have seen that 2026 could be quite an oversupplied year for oil, and that OPEC Plus might need still to manage the market going forward. So a lot of moving parts here.
Lots of moving parts. I want to get to that oversupply component in just a moment. But first of all, your base case is assuming that Venezuelan output will begin increasing in the fourth quarter of 2026. Are there some key factors that have to kind of align here to see that happen, to see Venezuela's oil industry kind of revamp?
Yeah, definitely. I mean, some of the issues are short term. I mean, what is going to be the nature of the Venezuelan government going forward, and U.S.-Venezuela relations, and will sanctions and blockades kind of be lifted? There's a possibility for short-term recovery of production. We've noted about 500,000 barrels a day potentially, order of magnitude, a lot of uncertainty, but starting to grow from perhaps the fourth quarter of this year through to the fourth quarter of next year. Now, these are things that we have to pencil in. Again, a lot of uncertainty, but we see that short-term upside, and some, heavier, sourer crude oil kind of coming back to the market here. Longer term, we've said that, here you might need on the order of $100 billion of more sustained investment of, up to a decade before you could see Venezuela getting back to historic highs of, it was once at 3.5 million barrels a day of production. That would be a longer road in our view.
That's the long-term kind of thing. Okay. When it comes to U.S. oil companies potentially investing in Venezuela, do you expect that to be happening at the level the market anticipates at this point?
Well, I mean, I guess there's a question as to what the market is anticipating. I mean, on one hand, there's clearly a big rhetorical push from the White House to get U.S. oil companies really into Venezuela. Of course, some are already active. Chevron remains one of the sort of few sole companies that has a U.S. government waiver to continue operating, even recently under the recent pressure. But there'll be a lot of questions. I mean, on one hand, yes, for sure, there are significant, huge reserves of particularly extra heavy oil in the Orinoco Basin. So if that were developed, that would be very significant. On the other hand, there's a lot of old infrastructure. The governance, I think, is going to be a very, and fiscal regime, how are revenues split? All of these kind of questions, security situations, stability of governance, that all kind of need to be part of every company's decision-making process for whether to do this. And then in the backdrop, of course, there are alternatives. There are investment opportunities in other places. And then at the base of it, what are the economics? What is the oil price? And the oil price itself is not particularly high. I mean, as we've forecasted over the past year, prices have come down to Brent at $60, and this is a moderately low price. It's not super low, but it's moderately low. And that may also stimulate sort of exuberance to invest heavily in new supply as well. As mentioned, 2026 is kind of an oversupplied year in our and many people's views. 2027 could still be oversupplied.
You mentioned those falling prices as well when it comes to oil. What do you expect from OPEC plus producers this year, given those falling prices, given what's happening in Venezuela? Do you expect maybe greater production discipline this year from members?
Well, we already, as mentioned in our annual outlook, which we put out a few weeks ago, that something might change in Venezuela and that production might rise in Venezuela, and that oversupply in 2026 could be quite substantial. However, we were also seeing factors that would support the oil price in more of a range of $55 to $65 Brent. So one of those is actually strong Chinese buying continuing, so stockpiling for strategic reserve. That's something that continues in the background. But then importantly, OPEC Plus. There are a few different views on this. Our base case is that OPEC Plus will continue to pause its unwinds of its oil production cuts, as they've done so for the first quarter of 2026. But we see that in our base case stretching out through 2026 and into 27. They may even be more active to support the $55 to $60 view, in our base case. And if they do that, then I think that's going to be one of the things that helps support this price. Another one is ongoing geopolitics. The bear case and bear scenario there is that OPEC Plus, and in particular Saudi Arabia, may still continue to look at bringing more oil back. If there is some U.S.-Saudi alignment on keeping oil prices moderate or even getting them potentially lower, the White House may have an interest in that ahead of the midterms later this year, then that could mean that oil prices could move lower if the U.S. and the Saudis have that preference.
Okay, just so much to watch for. That's all the time we have, but really appreciate you joining us. Thanks so much.
Thanks very much.
That's Eric Lee, Global Energy Strategist at Citi.